Hi everybody, welcome to the Finance This Property That podcast. My name is Dion Fernandez and I am a mortgage planner and finance professional. My goal is to empower financial legacies for generations, and I look to do this by using my over 13 years experience in finance and having special guest speakers like financial planners, accountants, buyer's agents, family lawyers who are experts in their field to provide knowledge and free education. And without further ado, let's get into our episode today. Hey everybody, welcome to this episode of Finance This Property That. The solo episode, I've been doing a little bit of private lending lately, and I thought it'd be a great opportunity to talk about what that is. And the key takeout is around why to use private lending, because sometimes speed beats price. Now, if you are a developer, investor, a business owner needing fast, flexible funding, make sure you listen out to this. My ideal client, like we always talk about, is you're a time poor industry professional, you're a business owner, you could be self-employed as well, but also you're stuck. You're using one type of lending, you are not getting all your options, and you don't know what's out there because you're stuck with one lender, one policy. You're going back to your bank, you're probably seeing maybe even a broker that's not as experienced in that. I see it all the time. So what I want to talk about today is around private lending, and what is it, who uses it, the cost versus opportunity, the key risks and how to manage them. And I'll also tell you about a recent client story that I had for their development. So let's get into it. What is private lending and who uses it? Well, private lending is exactly what it says it is. You're not going through a bank. You're going through a private funder. They have raised funds in various ways, and they'll lend that money out to you for a short period of time. And you're obviously going to be paying a little bit more interest because they've got investors that have invested those funds. So who would use it? Well, if you're a developer that can't sometimes meet servicing requirements, you don't meet policy for the bank, because believe me, if you're a developer and you're trying to go to a bank and develop some land into houses, it's a very hard slog. Sometimes if you're a business owner that you're needing urgent capital for an opportunity, you also want fast approval, less policy loopholes, and someone that's really focused on the deal and the outcome, then sometimes private lending could be for you. Because let's face it, I don't actually use private lending unless it's the very, very last resort. And it'll usually be determined by, number one, policy, number two, serviceability, and number three, what are you actually trying to achieve? What is the project? Actually, and in any of those orders, it'll actually be going, what is the project, and then go from there as a number one thing. But what it really helps is around, well, what is the cost versus the opportunity that you could be missing? Because yes, the fees are a bit more because, well, quite frankly, someone's lending you money with very minimal documentation. The rates are a little bit higher. Sometimes, they can go anywhere from 8.99 up to 12%, depending on the risk. But let's be honest, if you're getting in early and you're going to make like 20, 30% on it, it's just a tool, not a penalty. It's a bit like lender's mortgage insurance. The way we'd probably look at it as well is exit. Everything starts with the exit. Well, what is the exit? What is the timeline? And that's what we need to build into the whole total cost in the planning. We call that a feasibility study. How much is this going to cost? What is all your costs? And what's your exit? And what are you left with? What's your return on investment? And I've touched base on that is around some of those key risks and how do we manage them? Well, the key risk on this is the exit. Well, how long is it actually going to take for you to do this deal, and is it realistic? So yes, one of the risks is around exit. We don't want you to get default interest if the delays occur. How do we avoid this? Well, we actually take a slightly longer term than you actually need. If you're telling me you're going to build a house or build a property in 12 months, we allocate 15 months. Because if your exit is to sell, you probably want the finished product to actually market it a lot better. And there's probably a 3-month lag time in the selling anyway, because you've got to advertise, prep it, especially in this high-end market, and get people through. You may have a 45, 60-day settlement. So we want to manage that pretty well. Yes, you've got higher fees. Well, how do we manage that? Well, I negotiate with some of the lenders. Now, it's very little wiggle room in the establishment fees, but depending on the strength of the application, it's all about how you submit the deal, and also credibility with that lender, and also creating credibility for my client to say, yes, they are going to be able to pay this back. They have got history of doing this type of lending, and the product's actually going to be a great product. Here's the feasibility study, and not only giving the client feasibility study, but also giving them my feasibility study as well. The other way to manage the risk is only use this type of lending when you need to use it. Like I said, I don't actually put clients into private lending unless you actually need it. There's an actually specific purpose. So a recent study on the recent client that I did have that we're doing private lending on is he's in the middle of, he's bought the land in cash, but my client works overseas in a country where he gets paid, but we're not allowed to use income from that country for certain reasons. It's a policy thing. He earns very good money, and he would be able to service it if we could prove the servicing, but we're not allowed to because we can't go through the banks. So he bought the land in cash. We're in the middle of subdividing. And we want to build 2 rooming house accommodations in there. So worked with the project manager and the client and a couple of different private lenders, came up with a lender comparison, looked at all the fees, and came up with the effective rate. The effective rate between the 2 lenders was about 2.5-3%. We went with lender A. Lender A is actually funding the cost for development, which some of the clients already footed some of the cost, but also the full construction. The exit is to refinance out to a lender that will use the the rental income to service the debt. And being the LVR being only 65%, now by the time we're ready to actually refinance out these properties, the property value would have gone up and the rental would have gone up naturally as well. So we've already come up with the contingency plan. So we've worked backwards on how to exit. It's already in a company trust structure, so we don't have to change anything to do with the structure. The client is now still working. He's fly in, fly out. He's still working overseas. The development's getting done really quickly, and we're almost ready to build. And this project, we've allocated 15 months. It'll probably take 9, but the extra months will be getting people into the rooming house, getting the leases going, getting a bit of history like from the rental agents as well. So when we do refinance, we've actually got a really strong deal and we're exiting safely. So hopefully you guys got something out of that. If you are stuck comparing options and you're trying to figure out whether we go cheap money versus quick money, you need to stop comparing like that. You need to actually stop comparing. You should start comparing the outcome. What is the outcome you want and when do you want it? We can jump through the hoops and take our time and still be no further off a month down the track, or we can get stuff done in like 2 weeks. It's literally that quick. We can get approvals in 24 hours with private lending just based on the scenario that we sent. Now, we'll be having some BDMs coming on this podcast that do private lending. So we will get that, and I really want to share that type of lending that we do. So, like I said, like with every podcast, this information is very general in nature. If it has resonated with you and you want to talk about some sort of private lending opportunity, come and have a chat with me. You can find me on Instagram at Dion Finance Specialist. My link is in the bio to book a time. I also have the amazing Craig, who is my new senior commercial credit analyst. He is amazing at the development finance, private lending side of things, and also commercial lending as well. Between us, we'll be able to find a solution if there is one that works, or just the way forward as well. But if you're thinking about projects, if you are a developer, an investor, a business owner, you are needing that flexible funding, hit us up. We're happy to have a conversation and see if we are the best fit for you. But until next time, share the podcast, share the love, and see you on the next episode.